Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 4th of December. Now, as we come out of the North American session on Monday, now we're starting to get a bit of a clearer picture of what's going on in the major currency pairs here. Now, Euro really defused with the current movement on the US dollar. Now, the dollar, as I'll show you, getting belted against the offshore yuan. Obviously, the trade deal between the US and China really kicking in the Aussie and Kiwi to the top side and sending dollar yuan to the downside. A lot of people were thinking, especially me, it was going to go up towards 7.20, and it's now back at 687. So we'll see how that goes. Now, let's look at sterling. It's trading with a bit of a bearish outlook, but this could change on a dime with the Brexit news. So just hold back. I mean, there's so many stop-starts in this thing. It's hard to work out exactly what's going on. Now, coming from the weekend's activities, specifically on the Aussie and Kiwi, that news from Trump and China about a trade deal as such is really kicking them into the top side. Now, they're going sort of forward in all time frames. So at the moment, I can see the Aussie and Kiwi, they may pull back slightly, but overall, this is very bullish for the Aussie and Kiwi, and they're two potential big standouts as we go forward. Now, let me just come down and have a look at the dollar pairs. When you look at the dollar itself and you look at the dollar index, there's a couple of things going on here. And the dollar itself, have a look at this one here. It's not really doing a hell of a lot. A little bit of a gap here on the open on Monday. But you know what? It's still within tight ranges. Dollar yen is completely being sedated. It's asleep and not much going on there. Dollar Swiss, well, it's still trading to the sideways, but we do have a nice trend line here. We don't have the strength in the US dollar at the moment to sort of kick to the top side, but we are waiting for some numbers. But once again, you can see it is basically trading sideways. This whole situation with NAFTA and oil and everything else that's going on. So I was going to say dollar CAD gap to the downside. And then once it broke through that, let me just clear that line up a bit so you can actually see this. Once it broke through that trend line around 132, sort of 35, it did start to move to the downside. We had a nice little clean out down to the bottom. Now it's starting to trade sideways. Okay, we're sort of still waiting to see what's going on. But this move down has broken the back of the hourly support as well as the daily support and really puts the dollar CAD into a bit of a sort of mildly bearish setup. And that's against the current trend that was currently in play, just before this last weekend came out. Now, let's just have a look once again at this offshore yuan. Now, this is obviously the raw nerve. You've got to be thinking Donald had some cash on this himself, announcing it over the weekend, and then you watch the action on the currencies. So down from 6.95, the dollar yuan, okay, and then down gapping like 500 or 600 points. If this isn't enough of a deterrent to stop your holding positions over the weekend, I don't know what is. But look at the price action follow up here. So I don't think it's any time to be really buying the yuan. But it just goes, this is more of a flush out of positions. I think once we see all these positions squared up, dollar yuan should start marching to the top side because they don't have a hell of a lot to cheer at just at the moment. But look at the US equity market, up 1%. Pretty happy with the overall activity in the news over the weekend. That's very important going forward. So that's global growth, sort of back on the cards for going again. Now, if we get a sort of a good deal out of Brexit, well then, you know what? A lot of the geopolitical issues will be sorted out. NAFTA, well, I'm not sure what's going on there, but we need to sort of keep an eye on that situation as well. So there you have it. We've got the US dollar pretty much trading sideways. All right, now, if I just give you a look at the overall aspect and come back to looking at the MyFX Trading Hub and trying to sort of drill down to, go through the various aspects of the market. Well, up the top here, it's back on the cards, Trump geopolitics. Now, some of these moves, particularly in the Aussie and Kiwi, right, and dollar CAD, are all sort of geopolitical turnarounds. So at the moment, and the moves as well, you got various moves on the dollar. It's going up against some currencies, down against others. To me, the dollar index has been sort of pretty much defused at the moment. And funnily enough, that goes for euro. Now, I had the US dollar going up last week and euro coming off. Now, that's a bit of a change. The significant technical changes are dollar CAD to the downside and the Aussie and Kiwi to the top side. Now, I've got them as sort of mildly bullish and mildly bearish for dollar CAD. And that's because, this is all geopolitically driven. If it was a fundamental driver like the central bank, well, then they'll be just bullish and bearish. But at the moment, these could be temporary moves, and we need to see how the market reacts over the next coming days. Now, one thing that brings back where the key activity is going to be at the moment. So you're going to follow the trail of the fundamentals, and this is where momentum will come from. So Aussie RBA interest rate decision. Now, they already came out last meeting and said that the next move is going to be up, but it's not yet. Now, as I said, if all these geopolitical situations clear up and we start to see the equity markets move higher again, and the Fed also signaling that they are going to be sort of a bit more on a neutral sort of stance at the moment, we may see that move in the RBA sooner than later, probably, but not in 2018. Then we've got some really high impacting stuff coming out. So Carney, I think he's going to be talking about, the state of the economy in the UK and the impact of Brexit and everything else. It's just a bit of carnage to follow last week. There's also, I think, later in the day, the Bank of England bank stress test. So keep an eye out for that as we go forward. This construction PMI, usually, pretty solid stuff. Well, it's caught up in a whole heap of geopolitical stuff, so I don't think it's really going to impact. And then as we move forward, we're going to start to be looking forward to Draghi speaking later on. So at the moment, the focus is really on, should be focusing on these pairs that actually have clear direction at the moment. And right at this very point in time, the Aussie and Kiwi have got the really strongest sort of technical time frame on the hourly, daily, and weekly charts. Funnily enough, we have the RBA today. So strong hawkish comments once again from the RBA. We could see the Aussie really pop. I don't know if it'll go too far because the US dollar at this stage is pretty much trading sideways. But don't forget, the central bank does dominate. And if we do get something, it's probably unexpected for them to be more hawkish than what they already are. But that's where the trail is. So you got to follow the pairs that have the key direction and match it up with the data. And that's where you can potentially see the good trading opportunities as we go forward. All right, so that's one thing that you have to sort of keep an eye on now. Once again, keep an eye on the news pages and see where the direction's coming from. Dollar dips on US-China trade war truce, Aussie yuan gain. Yeah, well, don't forget the poor old Kiwi. That's gone up. Aussie and Kiwi and the yuan were the big movers over the weekend. That's where those big gaps are. Now, don't mess around with the gaps. There's no need for them to be filled. They could come back anytime. What we're looking for is a connection with the current fundamentals, and it may take another day or so for that to calm down. Now, sterling, once again, as you'd expect, negative Brexit news pushing it lower. And you've got dollar CAD rallies to 2-week high on US-China trade truce. Well, I don't know about that. There's a bit of a mixed, the commodity currencies have all rallied, but don't forget, I don't know what he's doing with NAFTA. That seems to have been pushed to the sidelines, and that should really come back to impact. Now, don't forget, dollar CAD has broken down here, but at the same time, we've got the Bank of Canada interest rate decision this week. That's probably going to be the major focus going forward. So as much as I want to be short dollar CAD at the moment back towards 132.40, it's a pretty tall ask to get in there and hold those positions. All right, now, one other thing I just wanted to show you is there's a couple of other data releases coming out that aren't on the calendar that we have. Now, these could potentially come into play. Now, if I just get my screen up here, I'll give you a bit of a look-see at that. So when we're looking at the numbers coming out now, obviously we highlight the major high-impacting numbers, and that's to give you a bit of a broad idea of what's going through the market. Let me just move that down. And that's what you should be following. So with some of these events, okay, so we've got the, I'm not too worried about the current account figures. The RBA cash rate is the most important thing. As you can see, no rate hike expected. CPI numbers out of Switzerland. Now, CPI for all countries is important. For the Swiss, these numbers are usually on par, but if there is variance, it will move the market, all right? And then, as I said, you've got the main construction PMI numbers out of the UK. I think they're going to be pushed aside at this point, but Euro is still a sitting duck for me. I like Euro still potentially more to the downside. Keep an eye on these Eurozone producer prices numbers because they could really come back to impact. Right? That's where their sort of major action is. And don't forget, we do have Carney speaking. That's going to be a lively event in itself. All right, and that's where I think the main action is for the moment, guys. There's not a hell of a lot to be chasing the market around. As I said, when you come back and look at the major pairs and you're trying to match up, potential trading opportunities, focus on the pairs that have a bit of clear direction. At the moment, it's Aussie and Kiwi, but what about this gap? Okay, so it's a little bit uncertain. To me, I like it to the top side, potentially buying back towards 73.20. But with the current environment, I'll be reducing my trade size on these because I don't really, the trend lines aren't great, and we've got geopolitical events still unfolding, right? So that's where I think it's going to be interesting. And once again, if you're looking at the dollar, there's been no major change. So don't get caught up in all the hype of the media and the dollar's being belted. To me, the dollar is basically just cruising around, trading sideways. Once again, the dollar index is a good indication of the basket. There's that sideways trading activity, and dollar Swiss also. Well, I guess you could say dollar yen for that matter as well, and dollar CAD the odd one out. All right, that's it from me, guys. Not much to mention at this point. We will be keeping a close eye on the data as it rolls out this week. And yeah, I'll see you in the 247 trade zone. We're in New York at the moment, so just bear with us if we're not responding. The Asian team's a little bit thin. All right, guys, have a good trade day. We'll see you in the trade zone. Cheerio.